Welcome to our Customs Virtual Forum this morning. Thank you very much for joining us. I think we've allocated an hour and a half for this, but it's quite flexible. So we may finish slightly early. And if you need to jump off the webinar before the end, then obviously that's not a problem, but it all depends on how many questions we get. My name's Karen Winrow. I work in the marketing team at Hillier Hopkins. We've been working closely with Ruth, who's going to be kind of sharing the majority of sharing with you her expertise during the majority of this webinar. And I think I'll introduce you to her in a second. So yeah, as I say, we've got an hour and a half to cover everything. Thank you to everybody who filled in the questionnaire that we sent around on Monday. There were some questions that you put forward from that, so I'll be putting those to Ruth in a little while. I think we've also got a Q&A function on this call as well. So if you have questions for Ruth throughout the session, please put those on there and I'll read those out so that Ruth can answer them during the call. And hopefully we can tackle everything. We have got the ability to unmute people. So if you have got something a little bit more you wanted to ask, then please just let us know and we'll try and unmute you for that. We've also got a poll at the end of this. So when we get towards the end of it, my colleague Kirsten will activate the poll. And if you could just answer the questions on there and we'll share the results with you when we do that. And also at the very end, there is a link to a couple of feedback questions. And we've kind of not done many of these, so it would be really good to get your feedback. And if it's something you find useful and you'd like more of, then it would be helpful for us to know how it ran for you and whether there was anything we could do to improve. But basically, we've got 5 weeks left now. I think 5 weeks today is the 31st of December. So that's when the transition period for leaving the EU will end, and we'll be in a totally new regime on the 1st of January, the next day. So as that day's been getting closer, we've been in the marketing team working with Ruth and her colleagues in our customs team to try and gather as much information as possible and get that out to our clients and people who have contacted us for information, just to kind of keep a stream of reminders and updates. And this is a fast developing situation and things seem to be being announced and things seem to develop on a daily basis. So we've been trying to get those out, but we just thought it'd be a really good idea to hold a kind of opportunity for you to put your questions to direct to Ruth and for her to answer them in a live situation, because quite often sometimes you don't really know what questions you want to ask until you get an update. So I think I'm going to hand over to Ruth in a second, just to give her the opportunity to kind of bring you right up to speed today. You know, she's had questions from clients, she's been in contact with the government, things are getting released on a daily basis, so she can bring you right up to date and also share with you some of the things that she's been kind of advising clients on with their difficulties and common themes that have been coming out and things you might need to watch out for. And then we will go through and address the questions that you've sent in on the questionnaire on Monday, and also then pick up on anything that comes through on the Q&A window as we go on. So without going on anymore, I'll hand over to Ruth now, who can bring you up to speed with the latest on Brexit and the end of the transition.
Hi everyone, thank you very much for joining us this morning. As Karen said, it is an ever-changing landscape. I think the first question my clients and the people I've spoken to have said or asked is there going to be a deal? Well, unfortunately, my crystal ball doesn't seem to be working on that front. We have, as Karen said, only a matter of weeks to go till the 31st of December. And I had an email from one of the government departments that's monitoring all of this and collating information, and I was rather surprised to find it in my inbox entitled "Squeaky Bum Time." So if the government is feeling that it is getting too close, then I think that probably tells you a lot. And it really is nip and tuck now, because whatever could be agreed in the next few days has to be agreed by the UK Parliament, which is fine. The Conservative government has a majority and probably will whip the vote. But it also has to be agreed by the 27 EU member states as well. So that's the difficulty. The EU Commission itself may agree something, EU Parliament may in theory agree something, but if one of those countries decides it doesn't want to play ball, and France is looking that way, then it will all fall apart again. So we may find that we don't know anything for definite until right up until the Christmas sort of deadline. And that will be just how nip and tuck it is. So from a point of view of planning, that makes it really difficult for businesses. It makes it very difficult for advisors as well, because we're having to sort of work on principles. And I've got a meeting this afternoon with HMRC to go through what their view of the situation is. I've been involved in reviewing some of the legislation for the last few weeks. I can't say a lot about what's in it because it's embargoed, but it's basically, does this make sense? Have you got any questions about it? So we've had draft legislation through for marketplace selling. We've had draft legislation through about ports and railway heads and things like that to define where the customs processes will take place. And yesterday we had the legislation through for duty free. So that's all changing. It is a daily change. So I have now a segregated part of my inbox for all the transition emails, and there are loads of them. And trying to find them again is really, really difficult. One of the points that I've raised with the government is that if you go onto the transition website and try and find a particular piece of information, you have to go through a checker. And for moving goods, that's about 15 clicks before you get to where you think you need to be. And even then, I can't find some of the guidance I know is there somewhere. So I can fully appreciate why businesses are really sort of struggling with all of this. So, and the other thing that I noticed yesterday, and I haven't had a chance to catch up with it, is they did a pilot on lorries going into Dover yesterday. And the pictures in the press were queues and queues and queues and queues of lorries, which is what they're expecting if things don't hit the ground running on the 1st of January. So if I put that into sort of context, Dover and the Channel Tunnel probably account for 80 to 85% of the movements of goods in and out of the UK to Europe. And this is why for those sorts of exit points in the UK, your hauliers are going to need a permit to enter Kent. And if they don't have that permit, they'll be fined £300. Now, who's responsible for getting that permit is probably something you need to discuss with your hauliers right here, right now, so that you know what you need to do. So it's things like that. We're just not used to those at all. Absolutely not used to having to have a permit to enter Kent. We're used to going around the M25, down the M20, tootling off onto a ferry. That is going to be quite difficult. So there is a lot to take on board. And for the clients that are on the call who've already spoken to me, they will know that I refer to it as a snow dome syndrome. You have so much information to take on board that your brain feels like a snow dome that's been shaken. There's so much whirling around. So for me, the sort of points that have come out is that people are quite happy to chat about their supply chains and where they bring goods into. For some businesses, they've not actually really had to think about it because it's just arrived at the door. And those sorts of points need to be fettled out. So if you're doing your customs planning for the 1st of January, my sort of basic advice is work out where your goods are coming into the UK and leaving the UK. Work out what your freight terms are, because you've probably not had to think about those, and they will be in your contracts with your suppliers and customers. Check that those are still going to work for you. Check that your hauliers, your carriers can actually still do the work, because they are going to be massively overloaded by all projections. And make sure that your customers know what their responsibilities are and what your responsibilities are. You may have negotiations, commercial negotiations that you need to and conversations that you need to have. So these are the sort of common themes that are coming out at the moment. So going back to basics, whatever the deal that we have with the EU, and whenever that may happen, we will have to do extra paperwork. There is no way around that whatsoever. Even the countries that are in the customs union with the EU currently, like Norway and Turkey, have some form of declaration to do for movements of goods between their countries and the EU. So that is a fact. It is not going away. It has to be done. What those declarations look like? Well, there may be simplified declarations for EU goods and UK goods going the other way, but without the trade deal, we won't know that. So we're having to assume you have to do full declarations. So if we look at goods going out of the UK first, which is slightly simpler than goods coming in, believe it or not, goods going out of the UK will need what's called an export declaration. Your haulier or you or an agent will need to file that declaration before the goods even leave your premises. So if you're looking at commercial terms and freight terms with your customers that say X works, your customer under those freight terms is responsible for that export declaration, not you, your customer. They will need to make sure they have the ability to have those export declarations filed. Because if they're not filed and the lorry enters Kent and everything's not been done, it will be parked on the M20 or Manston Airfield or wherever it is they're going to designate. So just be aware that the documentation has to be in place first. If the terms are things like FCA or delivered at place or delivered duty paid, you as the vendor of the goods will need to do the export declarations. So you need to be geared up to do that or make sure that you've got someone lined up to do it. If it's delivered duty paid, you have a responsibility to do the import declaration on the other side of the channel. Now, as a UK business, that is actually quite difficult to do because you normally have to have an EU customs person at the other side to be able to do those declarations. Now, what I would say is all the big hauliers will have people able to do them on the other side of the channel because they are global, they're used to doing it. But if you're using people who have never had to do this before, smaller hauliers, smaller customers or freight agents, they need to be able to do those declarations if you're doing delivery duty paid. So there's quite a bit to think about just on the export side of it. And then we have the issue, that's the customs side. Then we have the VAT side. So if you're exporting goods, you need to have a high level of evidence that those goods have left the UK for VAT purposes. So you need to have a combination of documentation that shows where the goods are going to, how they've been transported, who the owner is, all of those sorts of things, whether it's gone by sea or road. If it's gone by sea, the name of the vessel. If it's gone by road, the trailer number, that sort of thing. So it's quite a high level of detail. It doesn't have to be in one single piece of paper. It can be across a whole load of different bits of paper. And it doesn't necessarily have to be paper. You can keep it electronically. But you have to have either one piece of official documentation or one piece of commercial documentation plus supplementary documentation. So the official documentation is the export entry. That shows that it's gone onto the export system and there is obviously an intention for it to leave the country. The commercial documentation are things like bills of lading, airway bills, seaway bills, that sort of thing. And your supplementary documentation is any of the correspondence you've got with your clients detailing how and where, how the goods are going, where they're going, when they're going. And that needs to be all kept together for every single movement that you make. You may have more than one consignment going at a time. If you have and you've consolidated them, you need to make sure you've got the links in your system to track through that paperwork. When it gets to doing the declaration, if you're using an agent, you need to give them as much information as possible. So they will need to know, they will probably have already decided how it's going to leave the country. So they'll have decided what vessel it's going on, maybe what lorry number it's going on, sort of the container numbers and things like that. They'll have that information, but you will need to provide them with a commercial invoice, which will need to show the commodity codes of the goods that are going out, the number, how they're packaged, are they in boxes, are they on pallets, are they a number of boxes on a pallet, all of that sort of thing. Because if customs stop that load for whatever reason at either side of the channel, effectively, then they will need to make sure that what you've got on that documentation ties up with what's on the invoice, because if there's any losses, someone is liable for VAT and duty at some point. So you need to make sure that your documentation is as full as possible. When it comes to descriptions, make sure your descriptions are as fulsome as possible so that those goods can be positively identified. They may have identity numbers for parts in computers. You may have, sort of a serial number, those sorts of things. So it's a lot to think about. You may also, you give your commercial invoice to your agent. You may have a packing note in the box that should tie up with the commercial invoice, or if it's a series of boxes and you've got a different packing note in each one, the consolidated packing note should match your invoice. You will have things like certificates of status to worry about, which is something we've not really had to worry about whilst being in the EU. And the certificate of status tells the importing country in the EU where those goods have actually originated from. So if you have, I don't know, a glass that you would, a drinking glass, they would want to know where that glass originates from. If you have a machine that has a number of different parts, the majority of those parts have to be UK or EU. If they're not, then you need certificates of origin elsewhere. And if you have literally imported them and you're re-exporting them, then where you've imported them from will be really important. So certificates of origin, you need to look at how your goods are made up, what they're made up from, where everything's come from. So if I give you a really bizarre sort of example, the other morning on Times Radio, if anyone ever listens to that other than me and my husband, they have a spot at 3 o'clock in the morning, which is not the best one in the world, with Digby Jones, who used to be, I think, the head of the CBI. And he did one, he talked to Harris Tweed. Now, Harris Tweed is, sort of literally grown in Scotland, in the islands up there. But he was having to look at not only where his tweed cloth came from, but where the wool from the sheep came from. So if it was all literally homespun, he was fine. But if he was importing wool from somewhere else, or if he was mixing it with alpaca wool from somewhere or merino wool from somewhere else, he'd have to know where all that comes from. And if you want to know just how silly that could be, the BBC used to have a clip on the origin of a sausage roll. So the sausage roll, and this was in context of the Northern Ireland border in particular, but the sausage roll, where did the pastry come from? Where did the ingredients for the pastry come from? Where did the meat for the sausage roll come from? So it does get to quite a granular level. But if you have overall a certain percentage, and I think it's over 50%, that originate in the EU in particular, then you should be fairly okay. But you do need to know where your goods come from and where the constituent parts come from. You will also have safety and security certificates for goods going out of the country. So again, you need to talk to your haulier about that. That certifies that the goods are not going to blow up the ship, the tunnel, or whatever, or the plane if you're air freighting them. And you have to have all of those ducks in line before your haulier will even pick up those goods, because the thing they're worried about is their lorry being stuck on the M20. Now, if you're exiting the UK and going via Calais or Boulogne, I know you said Folkestone, but that's the other exit point from the UK, the French have actually set up customs border posts in those ports, and they have a barcode system which they've been trialling. That will hopefully dovetail with the new system that HMRC is developing, which should go live in the next 2 weeks, hopefully. And that will mean that once you've got your notification that you can proceed to port, that barcode will appear and your lorry driver will have that, and they just scan that and hopefully they just go through. And the same when they get to Dover or Folkestone, those border points there should be able to see the import documentation for when you go across the channel. And that's the French way of trying to make sure that you don't get stuck in Calais or Boulogne or wherever, Dunkirk, Dieppe, Cherbourg, or whatever. So there are processes in place. The French have trialled theirs. They say it works. We haven't actually done much trialling of ours, so who knows just how that's going to work. So that's goods going out of the country to the EU. Goods going to Northern Ireland will be under a different, so this is GB to the EU. Goods going to Northern Ireland will be under a different regime. Northern Ireland will be part of the EU Customs Union and also part of the UK Customs Union. So you will transport your goods to Northern Ireland. You will account for UK VAT on them because it's still UK to UK. You will have some form of exit document to complete to show that those goods have gone to Northern Ireland. Goods that are transiting through Northern Ireland to Ireland, so you're not actually physically stopping in Northern Ireland for any great length of time, the HMRC guidance appears to say that there's no VAT or duty due, which I find difficult to believe as Ireland is an EU country. So that's one of the questions I'll be raising with HMRC today. The Northern Ireland side of it is changing regularly, and if you are trading with people in Northern Ireland, I would recommend you join the Trader Support Service because they're doing webinars and they've got a whole host of information there. And if you want the link, we can provide that for you. If you are in Northern Ireland or you're dealing and you've got a branch in Northern Ireland or a subsidiary, they will have needed to get an XI EORI number, which is specific to Northern Ireland. For some reason, there was a cut-off deadline for getting that for the 1st of January, which was actually the beginning of this week. But I would say, give it a try. Who knows? They may process them quickly enough. But be aware that if you haven't applied for it, you may not have it in time for the 1st of January. Goods that may be at risk of smuggling, and that's usually excisable goods, so alcohol, tobacco, that sort of thing, will be subject to customs duty in Northern Ireland so that they can't be smuggled. Goods coming from Northern Ireland to GB, there's no extra documentation and it's still UK VAT, but movements through Northern Ireland will be recorded on VAT returns for your Northern Ireland businesses, and they will use the same boxes as we use for the EU now. So there are going to be changes. There'll be changes to computer systems. There will be, all sorts of things going on. So keep yourselves up to date if you can, at the very least, with the Trader Support Service for Northern Ireland, and we'll try and keep you up to date as developments happen. Goods going into the EU, coming into the UK, there will be two different sorts of systems. So if we look at just the normal, what I call the normal system, that is a normal import. For those of you dealing with the rest of the world and importing from China, the US, Australia, etc., you'll be pretty au fait with all of this. But they will be subject to an import declaration. They will also be potentially subject to customs checks because we want to make sure that what's coming into the country is what it says on the documentation. They won't necessarily always be subject to them, but just be aware they could be. At that point, you would normally have to pay duty if duty is due. If you're unsure of what duty rate is due, the UK proposed tariff is publicly available. And the UK has been quite aggressive in some respects. So it has removed tariffs from a lot of goods that are coming in order to be very competitive with the EU. It has also reduced a lot of them. It has removed 6,000 lines from the tariff. So you may find that your commodity code that you've been used to using isn't there. So you need to find an alternative. And some of them have been kept the same. There are quite high duty rates. Things like lamb apparently have a duty rate of about 47%. And some foodstuffs will be quite high to protect our homegrown industry. Cars, regardless of whether they're environmentally friendly or not, are at 10%. So that's quite aggressive. And you just need to make sure that you know what commodity codes you're using. It is available in a CSV format, so anybody who's any good with spreadsheets can do VLOOKUPs and pivot tables and whatever to get to where they need to. But it is there. So you have duty when you come in. From the 1st of January, the UK government has said that you can use postponed accounting for the VAT, which means you do not pay the VAT when the goods come in. You account for it as an in and out transaction on your VAT return. That's fine if you can recover all of your VAT. If you're in the position where you can't, it is an in and out transaction, but you effectively end up paying some to the government, but via your VAT return. So the postponed accounting will go through boxes 1, 4 and 7 on your VAT return. So you need to make sure that your software is able to account for that from the 1st of January. You will get a statement from HMRC. So at the moment, those of you who already import from the rest of the world, you get a very pretty certificate of VAT paid at import, or a C79. And that has the HMRC logo in it in green, yellow, blue, running all the way through it. And each entry that you've had against your EORI number is on that certificate. That will change. You will get a statement. The only one I've seen is plain paper, so I don't know whether it have the watermark or not. That will apparently be available in HMRC's Chief and CDS systems. So just to explain, Chief and CDS are where you lodge your import and export declarations. So your agent should have access to that. How you will get that is not very clear, because as an individual trader, VAT registered person, you won't have direct access to those systems. So something else to remember, ask your agent for it. It'll be a question I'm asking this afternoon. It's not the way I would have liked the statement to be available. It would have been easier to put it into the business tax account like they do your VAT registration certificate. But we'll see what HMRC has to say with that, and it will probably come out on one of our customs updates in the ensuing days and weeks. That's the normal one, and they have got some transitional simplified procedures. Now they give you a 6-month deferment of paying your duty, but your VAT you have to estimate and account for on the VAT return that you do the import on. So if you import in January and your VAT return is in March, your January, February and March your January, February and March imports will need to be estimated on that VAT return. When you or your agent does the full or supplementary declaration in July, you will then get your statement of import VAT, and you have to reconcile that back to what you've already declared on your VAT returns. Now, that sounds very easy in some respects, because you know you've accounted for X in March, but you've got to be able to work out which of those imports are in there in that particular figure. So if you have forgotten one or whatever, you're going to have to make sure that you reconcile all of those. Also, the basis that HMRC are saying you should estimate on is different to the basis that would be calculated on when the declaration is done. So if I give you an example, HMRC have said it's the value of the goods, insurance and transport as the baseline to do your estimate on. When you come to do the full declaration, it is the goods, the transport, the insurance and the customs duty that is the basis of valuation. So if you're trying to reconcile, your amounts in July will actually be different anyway to your amounts in January. And then you've got your exchange rates to factor in as well. So tracking all of those could be quite difficult. Also, making sure that you or your agent do the supplementary declarations at the right time. How are they going to track them? How are you going to track them? That's another thing. It's an admin burden that perhaps you won't want to do.
Ruth, sorry to interrupt you. We just had a comment from one of the participants saying that the sun is quite bright behind you and it's difficult to see.
I might have to angle, because I haven't got any curtains on the window. That's the problem.
Okay.
I'm in the process of making them. Is that better?
Yeah, that looks a lot better.
Right, okay. So to do the transitional arrangements, you have to be registered, you have to be approved, you have to have a deferment account. You may or may not need a guarantee to do that. And the guarantee would be from a bank or insurance company, so that has a cost to you. It is possible to get a waiver, but you have to apply for it. So there's a lot of things to apply for in the next 5 weeks, and we've got the Christmas shutdown for business. HMRC fortunately doesn't usually shut down other than Christmas Day and Boxing Day. They sound like a simplified procedure, and in, I suppose, HMRC's mind, it is a simplified procedure. But when I've spoken to my clients about it, they've all said, not once. No, not a chance. There's just too much to think about. We'll have enough bringing in our goods without having to track everything. So that's sort of the declaration side of it. back to whether or not there's a deal, there are 3 areas that are still outstanding. They're minor in some respects, but major in others. Very politically hot potatoes. They were the ones that caused the problems with no deal last year, and they fudged with the withdrawal agreement, sort of kicked it down the road, and they still haven't been resolved. So it's who's got access to our fishing waters, things like standards and things like that. So they've been the problem for 3 years, 4 years. Whether or not they'll find a way around it, I don't know. So we are where we are. We need to get, sort of weaving on the fact that it might be a no deal, but accept that we might have a deal at the very last knockings. Okay, so one of the questions I had been asked in advance was, do you need to have a deferment account, or can you use your agent one? And will charges go up? Now, first thing to be aware is there is no statutory charge for the use of a deferment account. So HMRC will never charge you for using a deferment account. The people who will charge you are your freight or customs agent for using theirs, because obviously they have to take out a guarantee or insurance policy, or your bank or insurance company for taking out your own guarantee. So no, you don't have to have a deferment account. If you want to use the transitional arrangements, simplified arrangements, and your agent is authorised to do them, then you can use them to do it. But bear in mind, they will be jointly and severally liable for any duty or VAT that you end up not paying. So there'll be quite a cost, I would imagine, for using theirs. But there is no statutory fee for doing it. Demand for deferment accounts through banks and insurance companies, yes, I think that will go up, because people with large duty bills will want to defer for as long as possible. For those who don't know what a deferment account is, it's like a bank account or credit card account with HMRC. And basically, you have your duty deferment number, your agent knows what that is, you authorise them to use it. The duty, because the VAT will go through your VAT return, the duty will be offset against that deferment account number. You will get a statement, and then the amount is taken out of your bank account in the middle of the following month. So it's a bit like a credit card on a direct debit, and it is done by direct debit. At the moment, overseas companies, so those that don't have a physical presence here in the UK, can't use a UK deferment account because HMRC doesn't do international bank direct debits. So just be aware, if you don't have a UK bank account, you will find that difficult. For smaller consignments, you will still be importing and exporting, but the relationship with your carrier may change in terms of who accounts for the VAT and the duty. So if you are supplying consumers into the UK, if you use the likes of Amazon or eBay or Gumtree or however many other platforms there are, your marketplace will be the person deemed to make the sale to the consumer in the UK. So if you're an overseas seller based in, say, Luxembourg, and you sell to someone in the UK via Amazon, you are technically making a sale to Amazon. And so you deal with it as a normal business-to-business sale in the EU. And Amazon is deemed to make the supply to the consumer in the UK. And they will deal with the VAT and the duty. If you are dealing directly with consumers, there is a £135 limit, and I believe the postal packet scheme rules will apply, but I've yet to check that. That means that as an overseas seller, you would have to register for a separate scheme to make sure that you account for the VAT and the duty. If you're over that amount, you will probably have to register for that in the UK and account for VAT and duty that way. So the sellers are going to find it a little bit more tricky to do. If you are selling via Amazon into the EU, and the word I've had from my clients is that Amazon have said to UK sellers, we're not doing UK to EU. You'll have to set up in the EU and do EU to EU. But if you have a marketplace that's allowing you to do that, you are exporting your goods, and you may have a requirement to register in another EU member state, and perhaps in every member state where your clients are based. When it comes to the 1st of July next year, that will change slightly. And as a non-EU seller, you will have to register either in every country where you have clients, which you may already have done, or you can register for what's called a mini one-stop shop, not mini one-stop shop, a one-stop shop. And those are for low value items under 150 euros. And you account for it on a single return in one country. If your value is over that, then you will still have to register. So there are changes further down the pipeline for selling to consumers for goods. So that's the good side of things. It's a case of having a look at what you do, where you do it, how you transport it, where your pinch points will be, like Dover, Folkestone, wherever. Is there an alternative way of doing it? Do you need a registration somewhere else? So I've got clients registering for that in France, so that France operates a postponed accounting system for VAT in the same way as we're going to introduce. And then if you're selling to the French, they have a postponed system, French registration to French registration, so you don't actually physically pay over any VAT. You can also use a French registration to move your goods across to other countries as well and have the existing EU rules. So you may want to think about setting up an entity or a branch and registering it for that somewhere else in the EU where most of your goods are funneling. So for VAT, for goods, there's quite a lot. For services, they've kind of been pushed to the background. So whilst the main rules for services aren't changing on the surface, there are some things to be aware of. First of all, business to business services, for most of them, that isn't going to change. The place of supply will be where the recipient, your business recipient, is located. At the moment, you're supposed to show their overseas registration number, and you fill in an EC sales list, and you put on your invoice reverse charge service. Technically, from the 1st of January, you don't have to do any of that. But your customers will need to be aware that it's still a reverse charge service for them. So you might want to just keep the reverse charge narrative just to highlight it. When it comes to consumers, it's a little bit more difficult. So you are still exporting the services, and at the moment, under the general business to consumer rules, as a UK business supplying an individual with services, say tax return completion, you charge UK VAT, or you should be charging UK VAT. For the 1st of January, they become rest of the world, and the consultancy services and accountancy services and things like licenses and patents, all of those sort of intangible services, the rules are that the place of supply is where the recipient belongs. So you have say a French person having their tax return done in the UK for whatever reason, they will have it in their own name, and you have a requirement to register for that in France or Germany or Holland or wherever. So that is a big major change that hasn't really been expressed until now. Now, there may be some countries that find a way around that, because there are some countries that don't want people registering here, there and everywhere. And eventually the one-stop shop system that will be introduced for goods from the 1st of July will be extended to all B2C services. So you will have the option of a one-stop shop, which will simplify things. But until then, you have the potential to register for that wherever your customers belong. You also have to consider use and enjoyment in different EU member states. So if you're invoicing in one place, but the services are being onshored somewhere else in the EU, and that EU country operates use and enjoyment, you may have a requirement to register for that there. And the most common ones for those, and even if these are business to business, the most common ones are telephone, downloads, advertising, and staff, and hire of goods. So those 5 categories are quite common across the EU. We have them in the UK, but we don't have the advertising one or supplies of staff. So you have to be aware that you may have requirements to register. There's a slight funny with Norway in that, as the rules stand at the moment, as I understand them, Norway will allow the reverse charge for services going into Norway to businesses whilst we're in the EU, but once we're out of the EU, we may have a requirement to register in Norway. Switzerland operates a reverse charge, so does Liechtenstein, and as far as I can tell, so does Iceland. So it's only Norway out of the EEA countries that has an issue. You will still have a requirement to register if your supplies or services relate to land or its exhibitions and training, because they are the standard rules anyway. So the services will start to change, and if you are in the sector of downloads and telephone and broadcasting, where you sell to consumers and you use the mini one-stop shop in the UK, you will need to re-register for the non-union mini one-stop shop in another EU member state. You can't do that until we exit transition, and you have to do it by the 12th of the month that you actually first start making those supplies. So if you have customers that you invoice on a monthly basis for domain names or website preparation or anything like that, you may find that you need to look at where you're going to register for the mini one-stop shop. And of course, if you're already operating it, you already know you're in that sector. Most popular destinations for doing that, I would say, are Ireland, because you can actually register quite easily in Ireland. The Netherlands, for a very similar reason. Places like Poland and Hungary, because they have a great shared service sort of ethos. So, you know, people they speak very good English, and B, they're used to dealing with those sorts of businesses. So that's something to bear in mind. So there's a lot to think about, even on the services side of it. We won't have EC sales lists. We won't have them for goods either, unless you're dealing with Northern Ireland and Ireland, in terms of Northern Ireland to Ireland or Northern Ireland to the EU. We will have intrastats for goods for the first 6 months, and you will continue to have intrastats for Northern Ireland movements in and out of Northern Ireland from the EU. Other than that, nothing's really changing, apart from your duty-free allowances. So having given you the snowdrome syndrome for your business side of it, I think this will affect virtually anyone who travels in the EU. So as you know, when we go to the EU, we can bring back any amount of booze and tobacco we want, provided it's for personal use. Now, my husband used to extensively take advantage of this when the franc was at its low against the pound, and used to set off at some unearthly hour in the morning, go to France with his mate, load up a Land Rover Discovery, and come back with boxes of wine and an apple tart. And they did used to get funny looks at customs, but you know, by and large, they were okay. Now, when you are traveling between the EU and UK, and to some extent the rest of the world, because it will change for everything, your duty-free allowances will change. But tobacco will be whatever the EU or whatever the UK has allowed previously from when you come back from the States or Australia. They're not actually changing. But the alcohol ones are, because of course it was quite liberal. And now, once we're out of the EU, we can set our own limits. So your limits will become, because I looked them up, you can have 42 litres of beer, duty-free. You can have 18 litres of still wine, duty-free. And you can have 4 litres of spirits or 9 litres of sparkling wine, fortified wine, or any alcoholic beverage of less than 22% alcohol by volume, ABV. So if someone is bringing in 3 crates of beer, 2 cases of still wine, and 1 case of sparkling wine, they can bring that all in without paying any duty or VAT. There will be a new system. So if you've decided that 42 litres of beer is not enough, and you bring in 50 litres of beer, there will be an online system to register that with customs and pay the requisite excise, duty and VAT. Now, a word of warning, you do not get your first 42 litres free and your 8 litres or 10 litres or whatever with duty and VAT. You get the whole darn lot subject to duty and VAT. So, you know, if you really do want more than 42 litres of beer or 16 litres of wine, which, oh, it says 18 litres of wine actually. I thought that was a bit odd, because when I divided that by the size of a bottle, it came out to a really weird one. That is 18 divided by 0.75. 24 bottles of still wine. For those of you who are better at maths than I am. Thought it was odd when I thought it was 14 litres. So 24 bottles of wine. If you bring more than that, then you will end up having to pay excise duty and VAT, even if you have paid excise duty and VAT in the country where you got the wine from. So you're getting double whammy there. If you go over some upper thresholds, which are actually quite high, I think it's 90 litres of still wine. So anything between 80 and 90 litres you can do on the online system. You go over 90 litres, you're going to have to go through the red channel and do all the paperwork there. So it's important that you're aware of what your duty frees are. Now, if you're going from the UK to the EU, it's much more restrictive. So if you're buying your duty frees, you'll be much more restricted going UK to EU than coming back the other way. And for those of you who have travelled by ferry as a passenger with duty-free shops and things, or the shops on board, they aren't allowed to open for a certain period after leaving port, and they have to close a certain period before getting to the destination port. From the UK side of things, that won't apply. So you'll find that your duty-free shop is open when you get on board in the UK, and will close when it gets to EU territorial waters, which is 12 nautical miles off the French coast. Coming back, it won't be open when you get on board, but it will be open right up until you hit the port. Hopefully not hit literally when you get into the docks in the UK. So just be aware that whilst we have quite a generous, albeit not as good as the EU, set of allowances, the EU have got much more restrictive ones. Now, there are posters being put up at all the ports and airports to remind you of all of this. Presumably, given the number, 24 bottles of wine, you wouldn't get many holiday clothes in your suitcase with 24 bottles of wine. So presumably you will be at the carriage, the baggage reclaim somewhere, or on a boat in time to do your declaration online. But if you're caught with more than that and you haven't done a declaration, then it's usually criminal penalties. So it's probably not worth going to prison for. So the tobacco, for those that are interested in tobacco, and there's also a new category as well. It's 200 cigarettes or 100 cigarillos or 50 cigars or 250 grams of tobacco or 200 sticks of tobacco for heating. I've never heard of that. That's the new phrase. No idea what that is. People might know. Or any proportional combination of the above. So you can mix and match, but you can't go above any of those. And then any other goods, so they're the excisable goods. There is a limit on other goods you can bring back duty and VAT free. It's £390 worth of goods. So your diamond ring, unless you're really lucky, is not going to fall within that. But if you're bringing back clothes and things like that, then you've got £390 or gifts. It's a slightly lower amount if you're travelling by private boat or plane. It's £270. Going back the other way to the EU, it is, I believe, €150. So you've got much less allowance going back the other way. The tobacco one should be the same EU to UK because we haven't changed those. So HMRC have actually said for your beer allowance, your 42 litres, for anybody who's interested, will be 3 crates of pint cans.
Ruth,
yeah.
Sorry, Ruth. We've had quite a few. We've had a few questions on the Q&A now.
Yeah,
and we've also got some questions that people submitted on Monday. So I just wondered if you wanted me to go through those now, just to make sure you've either addressed them already, which you may well have done, or if there are some areas.
Let's go through them. Yeah.
Okay, fine. So turning to the questions that came in on Monday, the first one is, what is an importer of record? Is this included as part of the import-export declaration? And I apologise if you have addressed this already.
No, I haven't actually. And that is it's a very valid question, because importer of record and importer of fact are actually customs terms. Okay, so the importer of record is the person who is, as the name would suggest, the person who is on the paperwork as doing the import. That isn't necessarily the person who can claim back the VAT. So this is where we have a problem. We have a divergence from the customs rules and the VAT rules. So an importer of record is basically the person who will pay the duties and the VAT. However, the person who can claim that VAT can only be, for the UK perspective, can only be the owner of the goods when they come into the UK. That does have a tie-in with your incoterms or your freight terms, although HMRC don't always stick to them. So just because you've got, say, incoterms of delivered duty paid, where you would be responsible for paying the duty and VAT, if the person who sold those goods to you has some form of retention of title clause for whatever reason, or there's a reason why the title hasn't changed when it's in the UK or before it gets to the UK, then you won't be able to recover that VAT. And an example of that is if you are someone who's going to hire out goods and you actually hire them yourself, or you bring the goods in and you're going to hire them, the actual person who owns those goods will not be you. You're just the lessee. So you can't get that VAT back. The owner of those goods, the owner of that vehicle or that photocopier or whatever, is the person who has to register for VAT. So it's really, really difficult. Your incoterms will give you an indication of what you have to do in terms of your transport, your insurance, risk for the goods, and the declarations, but it doesn't always determine who can get the VAT back. So if you are the person who needs to claim back the VAT and you need to be on that documentation, you have to be there as the consignee on your declaration. Regardless of who the importer of record is or the importer of fact, you have to be on that declaration.
Okay, we also have a couple of questions regarding VAT, and I think you may well have answered these previously. So the first one was, I would like to know if we will need to set up a VAT deferment account of goods coming in from our head office in Germany, or whether we can just declare VAT in our usual quarterly return. And the other one was, do we need to pay VAT on goods coming in, then claim back, or can we do our usual VAT quarterly return?
Yeah. So I covered that under the postponed VAT accounting, but just to refresh that, at the moment, when you import goods, you get the certificate, you pay the VAT at the docks or to your freight forwarder, and they pay it on your behalf, and you claim back on the VAT return that certificate covers. So you physically have to pay cash up front. The postponed VAT accounting is designed to make sure that you don't have to do that. So as long as you know what your imports are, you are entitled to use it. You don't have to apply for it. You account for the VAT, so you take the net value of your goods plus the transport insurance, and if you're not doing the transitional bit, simplification bit, the duty amount, you times that by 20%, you put that in box 1 of your VAT return, you claim it back in box 4 of your VAT return, and the net amount goes into box 7. So it is really, really simple in theory. So you don't actually physically have to any longer fund the VAT element of it. It's just the duty side of it. The duty will always be a cost. You can't reclaim it anyway, so you would pay that either on the upfront, so that the goods clear through customs, or you would have a duty deferment account for it, but you would have a lower guarantee if you need it, or if it's under certain limits, you wouldn't need a guarantee. Or you would ask your agent to pay it and they would put it through their deferment account and you pay them. So it's for the VAT side of it, no, you don't need the duty deferment.
Okay, thank you. The next question is, what does a certificate of origin look like? Does it need to appear on the invoice as text, or is there a document?
There is a document, and the Chambers of Commerce are geared up to do them. So I would contact, they are able to, I believe they're able to issue certificates of origin.
Okay.
You will need to put where the origin of the goods come from on the declaration, but there's not enough space to do like a full one.
Okay. Next question. The latest TSS, and apologies, I don't know what that stands for, but the latest TSS weekly bulletin has said that if we already have a GB EORI number and HMRC thinks you need one with XI, it will be sent automatically in mid-December. Should we still apply for one ourselves?
Hillier Hopkins has a GB EORI number because we're setting up a declaration service, so we needed one. I got the emails to say you need to register for your XI one. So there's conflicting information coming out. I have seen exactly the same bulletin. What I would say is if by mid-December you haven't got your XI number, then chase it through. So they've got a register of every person who's registered with the TSS that has a GB EORI number. So they should issue them automatically. And they did for GB EORI numbers last year. So when we were doing no deal preparation, they identified anyone who had any transactions through boxes 8 and 9 on their VAT return and automatically sent them a GB EORI number. So I'm hoping the system will work. But I've had conflicting information. Having got a GB EORI number, I still got the reminder to do it.
Okay.
So, the government communications have not been great.
Okay. Next one, how do we find what customs procedure code to use on the declaration?
There is quite a useful, although it's full of a lot of jargon, notice on special procedures, which I'm happy to send people a link to. So each procedure, for those of you who are wondering what the heck a procedure code is, I will run through them quickly. There will be a procedure code, I believe, for telling your agent and telling customs that you will be accounting for your VAT under postponed accounting, for example. So if that's what you're intending to do, you need to tell your agents, because if you don't tell your agents, HMRC will assume that you'll be paying the VAT up front. So let's make sure that everybody gets that right. There's a special procedure code if goods are coming in temporarily for repair or for processing, or they're coming in for an exhibition, or for whatever reason they'll be going back out again. There's one for where goods are going to come into a customs warehouse where they will stay for a certain period of time before you sell them and move them on. There's one for a bonded warehouse, which is different to a customs warehouse. That's if it's for alcohol and tobacco. So there's a whole list of them. There is a whole notice devoted to special procedures, and I can send people the link.
Okay, thank you. Another question. It starts with an apology. It says, sorry, you've already covered, but please could you clarify? I don't think anyone needs to apologise for asking for clarification on any of this.
Not at all.
It's a minefield. Okay, so we export a significant amount to the EU. I understand that there is a difference below £135 and above. Can you confirm how below and above are treated on our invoice? Currently, we invoice EU customers with UK VAT unless they give us their VAT number, in which case we sell with no UK VAT.
Right. I understand the question, and I touched on it. As things stand at the moment, and subject to anything that might change in this afternoon's meeting, anything that leaves the UK will be classed as an export, regardless of whether it's to a business or a consumer. So therefore, technically speaking, you need to do an export declaration for it, and potentially an import declaration the other side, because whilst, that's my dog going crackers, I think the postman must have turned up. Whilst you know, we've been used to dealing with UK VAT under certain thresholds for distance selling, for example, that won't apply because that's an EU scheme. I think he's probably eaten the postman. So it's a bit sketchy at the moment, and I'm hoping to get clarification on that today as to what will happen. But be aware that you may well have import declarations and export declarations to do.
Ruth, after today, when you've got a bit more information, we will summarise, you know, what you found, and we can get that out on our customs update email that goes out, can't we? So if any of you don't currently receive that into your inbox, then please let us know after this, and we'll make sure you're added to the mailing list for that. So that's an email we've been sending out called the Customs Countdown. So yeah, do let us know, and then we can just keep you informed and updated as and when things emerge. We kind of get these things put together and sent out. So that's that one. Then we have another question. So this came in on the chat box, so it's slightly different. Let me just see. So I have queried this yesterday, and HMRC advised you need to apply it again because it's not automatic. Apply for it again because it's not automatic.
Is this the XI number?
That must be, yeah.
So, I mean, they have sent out conflicting comms. And literally the last one that I had said exactly the same as the previous person said, that it would automatically be generated if you've got a GB one. I think it's only if they've identified that you've done any trade with Northern Ireland. So I suppose if you have a Northern Ireland address and you've got a GB or I number, they can actually easily do that. But of course, if you've got a GB address and they don't know what you're doing in Northern Ireland, then you know, it would make sense if they just gave everyone with a GB EORI number an XI one. And if people used it, they used it. And if they didn't, they didn't.
Okay.
But that's probably too much common sense.
A question, I think it's just asking for clarification. So postponed VAT accounting will also be possible for goods from the USA? Yes. Yes.
So it'll be all imports. The UK under WTO rules is not allowed to differentiate between the two. So it has to, one of the reasons why they hesitated about one of the reasons why they hesitated about bringing it in was because it would have to be the rest of the world imports as well, and they weren't too keen on doing that. So in the end, the pressure from business was such that they decided they would do it, because the loss to the Treasury in terms of, you know, money flowing through was less than, you know, the perceived cost to business.
Okay, if we already have an EORI number, do we need to apply for a GB one, or will this be sent automatically?
No, so if you have an EU EORI number, so one starting in SE or FR or DE, you need a GB one to do imports into the UK from the 1st of January. So if you've never needed one because you've never dealt with the rest of the world, you won't have a GB one, and your EU one will only be good for bringing goods into the EU. So what I should have said, so if I backtrack, your EORI number is more of a customs and statistical thing, but it is pegged to your VAT number by and large. So at the moment, as things stand, while we're all still part of the EU, however tenuous that is, your GB EORI number works across the whole of the EU. And in theory, if you have an EU EORI number and you bring goods into the UK from the rest of the world, you can in theory use that one to do that, although there are problems around getting the C79 when you do that. So post the 1st of January, if you are importing goods direct as a UK business, if you're importing goods directly into the EU from the rest of the world or even the UK, you will need an EU EORI number. If you are importing goods from the EU and have never done it before into the UK, you will need a GB EORI number. So you may need at least 2. And if it's Northern Ireland, possibly 3.
Okay. I have had real problems trying to find out how to set up a direct debit for our deferment account. Has anyone found where you can do this, and could you share? So I guess that's a question to you, Ruth, and the whole group, if anyone on this call has got any tips.
Yeah, within the duty deferment application forms, there is a direct debit form. So I'll dig it out, and if that person wants to email our marketing team, then I can get it sent across to them. Or if everybody's having the same problem, then we can send it out more widely.
Yeah, that's fine. We can do that. And I've been told that if you are selling to EU, you need to put both your own GB EORI number on the invoice, but also the customer's EU EORI number must go on the invoice. Is that true?
I believe so, yes, because your freight agent will probably need that overseas EORI number for the import declaration the other side, so they know who's doing the declaration. So yeah, the more, what I would say is put as much information as you can on your invoices.
Okay, that's all the questions in the Q&A box. I've actually got one. I don't know whether you're able to answer this. This is just something I heard from someone else. So it was a consumer. They'd bought a car which was due to be arriving before the 1st of January, so they weren't worried about it. But they've since been told that this car is now delayed and they're not going to get it till sometime next year. And obviously that now with the, if there's a no deal and there's the potentially extra costs, what happens in that situation?
Right, okay, well, there's a number of possibilities, and there's something I perhaps should have said when I was talking about goods and things. So that reading back a year, when we agreed the withdrawal agreement, there is, I think it's Article 41 of the withdrawal agreement, actually says that if your goods start their journey prior to 11 o'clock on the 31st of December, and it's 11 o'clock because the transition period ends at 12 o'clock CET time, not UK time, but don't arrive until after 1st of January, for argument's sake, they are still classed as an intra-EU movement of goods, and so no duty and VAT is due. So to some extent, it will depend how long that journey is from wherever the car is coming from. So if you can show that it left Germany or Norway or Sweden or wherever it's coming from before 11 o'clock on the 31st of December, then you shouldn't be charged the extra duty. If it's after that, it will depend on who's deemed to be the importer at the time that the car comes into the UK. So my knowledge of the car market, particularly the new car market, is that all of the big manufacturers have a network of dealers over here, and some of them have UK headquarters over here, so who actually do the sales to the dealers. So you have the overseas manufacturer to the UK manufacturer to the dealer to the consumer as a chain, by and large. And you or I go to a garage and we buy from Joe Bloggs Limited, as far as we're concerned. It might be a VW car, but we're buying from Joe Bloggs. The invoice may come from VW itself, but based in the UK rather than Germany. And as far as we're concerned, we're doing UK to UK, so duty doesn't come into it. The duty will rest on either the garage or the manufacturer in the UK. So if they've agreed a price at a point, and this will be the fundamental thing, have you actually agreed that price, and have you actually paid that price either in cash or by finance, under a finance agreement? I think the manufacturers will find it really difficult to pass that duty on to you. It's really their cost, and actually, why should you pay it if the delay's their fault? Yeah, is my, if I'm being really cynical. In the extreme sort of situation where you buy directly, and it is possible in this COVID age to go online, configure your car and buy directly, I would say that's probably a commercial discussion to have with the manufacturer. Again, if the delay is on their part, then you shouldn't have to pay the duty. Whether or not you feel up to a fight with the major manufacturers is another matter. If at the end of the day that they play hardball, then yes, there's a chance you're liable for the 10% duty and your cost will go up. Okay.
Another clarification needed. So it says, but we do not need to put an EORI number in invoice for billing services to EU business customers.
No, an EORI number is only for movements of goods.
Right.
So if you're just doing services, you used to, the UK used to say, if you look at the things that should be on an invoice, it does actually say if you're billing services, you should have the overseas VAT number on it. HMRC have never really taken that as, if it's not on there, they're not that worried, to be honest. As long as it goes on your EC sales list, if possible. But we've always had a very lax attitude to, we count business to business for services as we take it that it's a business if we can show it's a business. VAT registration number doesn't necessarily matter for us. It just means we don't have the additional reporting. So you have to prove they're in business, otherwise it's a consumer supply. But from the UK perspective, we've never been particularly focused on the VAT number. Other jurisdictions are. So some jurisdictions will still ask for an overseas VAT number even when it's outside the EU. So if you're buying in services from overseas, you may find that they ask you for your UK VAT number.
Okay, that's it for those questions on there now. So I'm just looking at the time. It's 11:15 now, and we still we need to do that poll. I think it's probably a good idea to activate that poll. So if you wouldn't mind, Kirsten, could you start the poll, and then if everybody, all the participants wouldn't mind just answering this quick poll, and then we'll be able to share the results.
I'm just going to close it on my screen. There's no point me answering it.
Hopefully everyone can see that poll. It's popped up. Ah, yes, we've got some responses coming in now. Few more to go, about halfway there, I think.
That's a good response.
Okay, it looks like it's, oh no, there's still a few more coming in. I think that's slowed down now, so that's pretty much almost everybody there. Kirsten, can you end that poll so we can see? So you should be able to share that now, shouldn't you? Hopefully everyone can see that now. Are you able to view that, Ruth?
Yeah, I can see that. So hold on. I can expand the screen because cool. Yeah. Excellent. So looks like the worry about paperwork is still there. There's not a lot I can do about that other than say we're here to help if you need it, because we can't get around the paperwork issue. So and then that was the thing that was probably the biggest worry on the survey that we did beforehand. So although that possibly hasn't changed, at least people know that the paperwork is here to stay. So yeah, it's quite useful to see how people's reactions are. I hope people feel they know a little bit more about it than when they came in this morning, but I'm sure you'll tell me if you don't.
Yeah, hopefully we've managed to answer all of your questions. There's certainly no more questions now in the Q&A box. So and of course, if there's other things that you think about after this event, then feel free to just drop Ruth, Corkin an email direct, or us here in the marketing team, and we can field those questions to Ruth afterwards as well, or just pick up the phone to Ruth. I'm sure she'd be more than happy to answer the questions.
Yeah, not a problem. Just one more thing to sort of say. The thing that confuses people a lot is their incoterms, because they've never really had to deal with it. If you really don't know what your incoterms are, you can possibly work them out, because the International Chamber of Commerce has a really good bit on its site about incoterms. So it tells you what your responsibilities are under each one. It does also do a book, which I should get a commission for promoting, but it is really useful. It's called Incoterms 2020. It's about €45. They do an English version, and it goes into a lot more depth as to what each one means. But and which ones you can use with air freight, which ones you use with sea freight, etc. So if you get really stuck, if you really don't know what your incoterms are, or you want to know what the implications are of each one, go on to the International Chamber of Commerce site and they have them there.
Okay, thanks for that, Ruth.